and global markets. The all-share in particular closing about 0.5% in the negative this afternoon. The big losers on the day were the banks and some resource stocks. Nick Kunze is from Sanlam Private Wealth. He joins us now for some insight on the markets. Nick, we're down on the day by around about 0.5% on the all-share. Markets don't like high inflation, and the US is set to hike rates by a record margin. I mean, is this still the theme that has markets depressed at the moment?
Yeah, evening, Devan. Yeah, it is a theme. It's risk assets typically do not do well in a high inflation environment. They don't do well in higher interest rates. And as we all well know, interest rates have been record lows for the best part of a decade. So tide is turning. Inflation print last night, once again, north of 8%. And against that backdrop, emerging markets like South Africa didn't really stand a chance. Although it was a lot worse on the open. To finish down less than 1% is not really the end of the world.
Yeah. I mean, banks in particular today have had a hard time. I mean, they led the losses, but I suppose that's the way it goes. The banks are generally the first ones to be hit in a context like this, isn't it?
That's right. Financials tend to lead markets up and they tend to lead market down. And I think the challenge investors have got now, certainly with the likes of the banks or the financials, is, in higher interest rate environments and in higher yield environments, they tend to do okay. The problem you've got those, and I guess the balancing act the central banks have got, and including our own SARB, is not to raise too quickly and therefore push the economies into recession. And then you don't want to own banks. So it really is a balancing act. As I said, even our own SARB has got a challenge ahead of it in the months to come.
One interesting company result today, surging profits from momentum, Nick. The share price was up, but I suppose many insurers now feel the worst of COVID is now behind them, and you can see that reflection in the momentum results.
Yeah, much better set of results. A lot of them are old mutual, own Sanlam as well. They all came out with results that have been better coming out of COVID, out of the pandemic. A lot of the provisions they put aside, certainly they don't need them anymore. And I thought, Momentum's comments today were, dare I say it, a little bit upbeat, actually. So a little bit of glimmer of hope after the bad news last night out of the States. And again, also record dividend, 65-cent dividend, almost a rand full divvy. So positive cash flow, looking good. So the insurers tend to certainly have put the bad news behind them. And I think let's take that as a positive, but they look pretty good going forward.
Yeah, Nick, before I let you go, I mean, I suppose we've got to get used to this, the 17 Rand 45 to 17.50 to the US dollar. And I suppose until we get that interest rate decision in the US, this local currency will continue to sway.
Yeah, it's always a talking point in South Africa, what the rand-dollar exchange rate is all the time. I'm afraid it's not just the rand this time. It is all about that US dollar. It's been on an absolute charge, 24-year highs against the Japanese yen. We all know the euro-dollar is under parity or thereabouts. So it's not just the poor old rand, it's the dollar that's been so strong. And until things subside, until we start seeing a little bit of pulling back in that inflation number, I think we all have to get used to a bit of a weaker rand and emerging markets in general, just for now. But yeah, I'm afraid it's 17 and some change for the foreseeable future.
Yeah. Well, Nick Kunze from Sanlam Private Wealth, thanks very much indeed for those insights. All right, let's take